Now we are.
Also, I'm switching up to voice isolation now, so let me know if it works or not.
Okay. Yeah, I can still hear you. So this is essentially like a little schematic I made for today's lesson, okay? So what we're going to be looking for, or what we're going to be actually starting to trade, is a trend following system that uses two fractals, okay? The higher time frame is going to be an hourly or 4-hour trend following system, and then the lower time frame fractal is going to be that realignment of order flow. And essentially, when we're looking at market structure, right, and order flow, the reality is the market moves in a series of highs and lows, correct? If you zoom out. Oh, I can't hear you, maybe because you went to voice isolation.
Okay, can you hear me now?
Yeah, I can hear you now.
Back standard. Maybe that's better.
Okay, 1 second.
Okay.
Okay, so the market moves in a series of highs and lows, right? If you zoom out.
Yeah.
Okay, the idea, the thesis behind this trading model is to capture the internal to external range expansions of the market. So every time the market moves from a function of expansion into retracement, there is going to be some sort of lower time frame market maker model that you can realign yourself with. Generally speaking, as price moves from a range low to a range high, it will leave some sort of internal range of liquidity. We know those to be fair value gaps, right?
Yeah.
So in these fair value gaps are the opportunity zones where we can look for realignment of that trend, signifying the end of one phase of price, which is retracement, and the beginning of a new phase of price, which is going to be expansion, all right? So this bread and butter model is an internal to external range liquidity model like I talked about in that SysD video, and you probably recognize a similar schematic in here, right?
Yeah.
We're looking for that changes day of delivery, right? A SMT with a correlated asset, and then we're looking to trade from a higher low to a higher high, or in the cases of a bearish market, we're looking to trade from a lower high to a lower low, okay?
Got it.
So we're using institutional swing points as reference points for alignment of the lower time frame. When I say institutional swing points, I'm saying as opposed to anticipating that this low will form, right? What we're doing is we're waiting for this swing point to be aligned with this lower time frame to show that it will form. So we're waiting for the confluences that this swing low is going to offer a new high as it forms on the higher time frame. And we're going to use the lower time frame realignment to actually make a statement that this is the low that's forming, as opposed to something that looks like this. Okay? You see how we have a low put in here and we have a higher high? As opposed to here we have a low and then not a higher high and then a lower low, right? So we're using these swing points with the lower time frame realignment to align ourselves with institutional references, which are going to be internal ranges of liquidity, for example. I'm going to send you this schematic, and we're going to move on to identifying how we actually trade this. So, generally speaking, like the schematic says, the first thing we need to ask ourselves in this case, also I've been told that sometimes my colors are hard to see on the recording, so I'm just going to go to... Nope, that's not the right layout. That's not the right layout. This is not the right layout. What is this layout? This is the best one.
Yeah, with the slightly gray.
Yeah. Okay, let me reload this and change it to, there we go. This is like the stock ICT layout. It's a bit better. There we go. Okay. So what we're going to look for, right, first thing is what I was talking about. We're going to look to answer the question, what is the daily candle likely to do? And the way we can answer this is by looking at the other lectures I've already taught you, right? Things like candle body closures, internal to external, what PD arrays are being respected, what is being disrespected. Remember our previous lessons?
Yeah, the daily bias.
Exactly, the daily bias. Also structure, right? We've had basic lessons in market structure and order flow, correct?
Yeah.
So we're going to be using those concepts. Once we have an answer of which direction is the daily candle likely to expand in, what we will then do is choose a 1 hour or 4 hour inefficiency in the direction of that anticipated expansion, okay? So if we're bullish, we're choosing a 1 hour or 4 hour bullish fair value gap, and if we're bearish, it's the inverse, okay? Then we're looking for the time frame realignment you see here, right? So remember we had a lesson on just time frame alignments, correct?
Yeah.
So if I have a 1 hour gap, what's the lower time frame fractal to a 1 hour?
5 minutes.
Yep, and I have a 4 hour gap, what's the lower time frame to a 4 hour?
15 minutes.
Perfect. So this is going to be the simple version of your first trading model. And this is going to be essentially where we start building on other pieces of narratives like profiling, weekly profiling, protraction profiling, right? We haven't done those things yet, but we're going to start with this and then build into those, okay?
Got it, yeah.
Okay, let's take a look at some examples of this very simple foundational model, which again, so we're going to have this foundational or Primo model, which I'm calling it, is going to be this IRL to ERL system. Now that in of itself is not going to be profitable. This alone is not profitable or largely profitable. We need to layer narratives. So then we're going to talk about things like profiling, protraction, and advanced order flow. These things are what our following subsequent lessons are going to be on. But we're going to start with this model today because you have the background now, okay? Mm-hmm. Then once we start layering the narratives, you're going to be able to increase the essentially the expectancy of this model. Make sense?
Yeah.
Okay, let's do it. Let's start and let's backtest the last week, okay? Even though it was a pretty shitty. Actually, let's just backtest a random week. Let me choose like a random Monday. Okay. Let's do this week, okay? So, what's our draw on liquidity for the next day? Let's start with a weekly chart here. And let's mark out kind of the top down. So, in the previous week, we come into this weekly imbalance right here. You see that?
Yeah.
Okay, perfect. And now we're opening up on Monday, reacting off this imbalance. What we also might want to do is take a look at the S&P, see if there's any meaningful divergence that we can consider. I don't see any really... Oh, I do see, maybe. No. I see just this. This is the only meaningful divergence I see inside of that weekly internal. But it's still a divergence. That's interesting.
How recent does the SMT need to be?
Well, where do we look for SMTs? Inside of internal ranges of liquidity, right?
Okay.
Have we I talked about that, right, with you?
Yeah.
That's where we want to focus our analysis on, SMTs inside of IRL.
Okay. Okay.
Did you watch the SMT lecture?
No, I didn't get to that one.
Okay, so that we'll talk about this idea of where we were looking for the SMTs.
Okay.
Okay,
so here
so we have a daily SMT inside of the weekly imbalance. Okay.
Okay.
Okay, so what are we saying for Monday? What do we think is going to happen for Monday?
We go higher?
Yeah, and what about daily candle closures, right?
Yeah, that's what I'm basing it off.
Yeah. So the draw on liquidity might be something like this high, let's say, okay? Perfect. Let's play out the Monday and see if we could have aligned ourselves with that high, in the direction of that high, or also previous day high, right? Mark out both. Let's go to the 1 hour chart. So our draw on liquidity would have been previous day high always, and then this swing point up here, right?
Yeah.
What do we notice happens? So first of all, we notice that we come in on Sunday night, and immediately we take out that previous daily high. Do you see that? Then price starts to break down. Do you see that? How we get a change in the state of delivery lower?
Mm-hmm.
Okay, right here. Fantastic. Okay, so by the time New York opens, what's the order flow? Bullish or bearish?
Bearish.
This is going to be previous day high, right? We swept. Bearish. So now what are we looking for? Maybe we're looking to trade into the previous day low, right? Swept out previous day high. We have bearish order flow. We have a pretty tight range. So I'll mark out the previous day low as well. That's the range we're operating inside of, okay? So you want to choose a what? So now you have the direction. But again, by New York, you already know what direction you want to trade in because you have this very much so higher time frame, 4 hour chain to stay delivery, right?
Now I'm looking for the fair value gap.
Yep.
Bearish.
So there's your chain to stay delivery, right? You can look at the sessions and you can clearly see that this overnight session, right, is digging lower. So you're looking for the other side of the range. So you want a 1 hour or 4 hour inefficiency. Let's look at the 4 hour chart. See if there's anything. I see a nice 4 hour gap in here. And I see a 1 hour gap in there, right? So let's mark out both. All right. Here is your 4 hour gap, right? There's no other real gaps that you can see besides this one. But again, you're not trading until 9 a.m., right?
Yeah.
All right. So you have this nice 4 hour gap in here. Again, let's look at the ES and see if we have anything in there as well. So coming into the session, we have that 4 hour gap. Let's mark it on ES as well. What's the lower time frame to the 4 hour?
15 minute.
15 minute. Perfect. What are we looking for inside of this 4 hour gap now to qualify that this phase of price retracement has ended and now we're going to be looking to target all of this lower resistance liquidity?
SSD.
We also need to see what? Inside of this internal range of liquidity. SMT, right?
Yeah.
So the most important thing to wait for here is for an SMT to form. Now, as you notice, right, the only SMT divergence we get, because we run out these highs on both the indices, right? You see that?
Yeah.
We run out the 50-minute swing point on both indices. So now we have to wait for an internal SMT to form inside of here, which we will eventually get before we start to look for shorts. So you can see price comes into this gap, and then we form this lower time frame internal SMT. So you can see this candle here is swept out by this 15-minute candle, and ES puts in a swing high at that 15-minute candle. Do you see that? That is an internal SMT. That's your SMT that you're waiting for. Do you see that right there?
Oh yeah, I see it.
Yeah, you can see it even clear on a lower time frame chart, right?
Yeah.
Perfect. Now you have an SMT. What are you waiting for?
SSD?
Yeah, the chain of state delivery, which is defined as a consecutive series of opposing candles into the key level with SMT, correct?
Yeah.
So that's right here.
So the open of the first bullish candle.
Yes, the consecutive series, yep.
Yeah.
So then once we get that chain of state delivery, you short the open of the next candle. You cover the rejection block high, like we talked about in that schematic. Look at the schematic I just put in our one-on-one, right? This is the rejection block is defined as the highest, in this case, up or down close candle for a bearish price leg.
Okay.
Which one is it?
Sorry, what was that?
What's the rejection block? Is it the highest up close or down close candle?
Up close.
Up close, right? So you look and you want to put your stop loss at that candle body, okay?
Do you ever use the mean threshold as a entry instead of?
I always use the opening price of that chain of state delivery as a retest, or recently I take a market entry as we chain of state delivery in case we don't retest. Like, do you hear how we don't retest here? See how price does not retest this?
Yeah.
Yeah. So as you can see, now we have that chain of state delivery, right? We want to see lower prices. So what do we look for? To short at this open, covering this rejection block high, targeting the lows, right? Or 2R. There you go. Okay?
Yeah.
So that's an example of that trade. Let's do the next day. Let's do each day this week. Okay. Let's go back to the daily chart, see how this daily candle closes. So as you can see, this daily candle closes as we come back into this low with SMT, right? ES sweeps it out, NASDAQ doesn't, right? We have another SMT divergence forming at that low right there. What's our bias for the next day? Lower or higher?
Lower.
Lower, right? So let's see if we can take a trade into this low, right? I would actually be saying I want to still go higher based on that SMT and still based on this weekly imbalance, right? But it doesn't really matter. You could trade towards that low or see if we take that low before the market opens, right?
If it takes it before
Then
the
you
market
want to,
opens,
then you probably want to trade to that high, right? So let's see how price. So you can see how we take that low immediately on the open at 6 p.m. And then what does London do?
changes
Delivery state. So we have an
bullish.
SMT. Remember,
Yeah.
we have an SMT down here at these lows. Do you see that? So here is your SMT divergence at this low. You see that? That's a weekly divergence now we're forming, right? Thursday is low. Thursday is low. Do you see that?
Yeah.
Okay, perfect.
Yeah.
Now we have.
Reversal.
Yep. Right. So we've taken out the previous day low, and now what are we looking for? The consecutive series of opposing candles into that low with SMT, right? So what would that be? Right in there, right? So now what are we? Bullish or bearish?
Now we're bullish.
What are we waiting for in the New York session? A 1 or 4 hour inefficiency, right?
Oh yeah. Okay.
Remember, it's an algorithm, right? It's first question. What's the first question? Bullish.
Order flow.
Or
Yeah.
bearish.
Bullish or bearish.
2, H1 or H4 gap in that direction. Okay. Then we use then we start using more patterns. But this is the narrative. So what are we waiting for? A 1 hour, 4 hour for value gap, right? So into the New York session, I can see this 1 hour FVG in here, right? You see that as well?
Yeah, I see.
Perfect. Let's see if we get any divergence that forms inside of that fair value gap. Because right now we don't even engage it. So you can see, here we go. Okay. So in here, as you can see, we don't even tap the fair value gap, do we? Neither index takes that fair value gap. So that there's no real opportunity, right, for you to trade this because again, we don't have any fair value gap engaged here. We actually leave this as a double bottom, okay? Now,
No like chance for early entry.
I mean, you could take this order block, which I probably would have taken that day, just seeing this as a breakaway gap in the market, but it doesn't fit your entry model. So what would you wait for? A fair value gap to be engaged, right? You get another one. Yeah, right here. You get a reaccumulation right here, okay? You're not going to take it without the fair value gap being engaged. So let's mark out that same fair value gap.
Is there any more? There's more value on the 4 hour fair value gap, right?
Yeah, but it's not going to retrace that one. You can see we're in a 4 hour expansion, right? So you have this 1 hour gap, and you're just monitoring each PD array. So again, here's your chance in the afternoon session because the morning session did not give you an entry, okay? No entry here.
So now we go to the 5 minutes.
Yep. And what are you waiting for? Some sort of divergence, right?
S&P and SSD, yeah.
So as you can see, we're waiting for some sort of divergence. We don't have any divergence of these lows, do we? Well, let's see. No, we don't. It's equal lows. So
Actually,
ES leaves equal lows here?
Yeah, but we don't take it on.
Yeah, we don't take it on NASDAQ either. So we have no divergence yet. Okay? No divergence in this gap. What you need to wait for is some sort of local divergence to form in here. Because you don't have this higher time frame divergence. It would have been very nice if we had taken out this low. But you see how we leave these equal lows? Down here? We don't take it, right?
Mm-hmm.
Ideally, we would take those lows. But we don't. So you have to wait for a divergence to form internally within the gap. All you require is a 5-minute swing point divergence. No divergence here. Trades higher. Trades higher. Boom. There's your divergence. Do you see it?
Yeah.
That's all you have to wait for. That's going to be the signature that price is ready to reverse. Without that, it's not ready to reverse yet. As you can see, This price action is extremely choppy and wicky, right?
Mm-hmm.
Then we get the divergence. Now what are we waiting for? The consecutive series of opposing candles into that key level. Well, in this case, there's no opposing candles in this run. So you need to go to a time frame where you see an opposing candle run. Okay? There has to be a time frame where you can see the opposing candle run. It can't be like the same delivery state candle. So if we go down, why is this not loading?
It should be into the SMT or?
Yeah, into the SMT.
Okay.
I don't know why. Okay. So we need to find the time frame where there's an opposing run. I don't know why it's not loading here on the ES. That's weird. This looks good to me. The 1 minute chart does a good job of showing it. Okay, do you see this opposing run?
Yeah.
There you go. There's your train of state delivery. Your entry technique is a candle body closure through it. Cover the rejection block low. Targeting, well, in this case, the obvious draw is going to be this high, and then the higher time frame draw is up here, right?
Yeah.
Okay, perfect. There's your trade idea. Okay, there you go. So there's your PM session trade because you didn't get an AM session trade. Obviously, you're not going to hold for 11 hours. You're going to probably take most of your contract. You're probably going to take everything off here because that's a 6-hour trade, right? Mm-hmm. But you may have one contract for a runner because that's the more higher time frame obvious draw. Let's do the next day. You see how it's just like the same steps repeating?
Yeah, I see it.
Okay, let's go back to the daily chart. So, what's the draw on liquidity for the next day?
Higher.
Yeah, this I'd mark out that high, right? We have a nice reversal potentially on this Tuesday, right? With remember, we have SMT down where? At this low, right? Okay, we have a nice SMT forming on that daily chart. We get a very strong reaction out of that weekly gap, right? We would have a 4-hour chain of state delivery right here, right? Out of the weekly gap. Mm-hmm. So now I'm extremely bullish. I'm bullish to the other side of the weekly range because now we have weekly alignment. So now the next day I'm waiting for, let's play out the day, let's see what happens. And then let's look for what would actually happen. Okay, cool. So we have the right direction. You can see it comes back into that 4-hour and daily order block. Let's see how we would position ourselves in this day. So we're waiting for what in the New York session? We already know the order flow is bullish. A 1 hour or 4-hour gap, right?
Divergence. Yeah.
Okay, let's
wait, do we look for the divergence first or the gap?
The gap. Always the internal range first.
Okay.
So in here, we have this really nice fair value gap, don't we?
Yeah.
Perfect. Let's mark out the same gap on ES. You can immediately see on this chart the divergence, right? Puts in equal lows.
Mm-hmm.
Perfect. So that means in the lower time frame, we're going to see the very clear divergence. So we come in to this gap right here. Then we're waiting. Again, this is not really the kill zone open yet. I mean, here we could do this. There we go, from 8 a.m. So here you can see, right, I don't know if there's news this day, but if there's no news, you're going to want to wait till 9:30 at least. I suggest you always wait until 9:30. So you can see we come back into this gap and we form that divergence, right? As we come into here the first time, you notice we also form divergence in the gap, right? Do you see that? We put in these equal lows right here. So technically speaking, this is also a valid entry. But then 9:30 gives you another stop hunt. So it would have stopped you out. And then you get another SMT that forms, which is again valid again. To look for what? The consecutive series of opposing candles. In this case, it's nice because there's only one. Right? You're going to long that candle. Closure. So you're long here. Risk the rejection block low. Targeting. Well, where is the draw on liquidity? If we just look at the hourly chart, we can look for some draws.
That high?
Yeah, this high is a really good TP. And then obviously this is all failure swing to that high, which is even better TP. And then if you're really, really, really zealous, you can just say, I want to hold for the rest of the week to here. And this would be something like a swing trade you take, because this is a really high probability swing trade. Right? But then the next day, let's see what alignment you get. The next day, you're going to want to trade in the same alignment, right? Towards that high. Mm-hmm. So what's the draw on liquidity the next day? Same high, right?
Same high, yeah.
Perfect. So let's see if we can get a trade in the direction of that high. 1 hour chart, choppy session. Let's see. Again, we know what we're looking for, right? We see that we have this internal range of liquidity right here. Let's see if we can form divergence inside of there. Right. So we come in right here. Let's see lower time frame. What happens? So we have no short-term divergence forming in here except for this low right in here. See that stop on? And there it is on the S. Okay, there's your divergence. See that? Okay, fantastic. What are you looking for? The consecutive series of opposing candles into that level with SMT, which would be this opening price. Again, look at the bodies. You see the bodies? All holding it?
Yeah.
Yeah, that's telling you something. Okay, you enter on a candle body closure through. Rejection block low is your stop loss. And then your TP is all, if you haven't taken out the previous day high, for example. I mean, this one was obvious because you can see, what do we do at the previous day high? See, we have a failure swing?
Yeah.
Where neither index takes out the previous day high. This is like super, super clear draw on liquidity, right? It's previous day high. So that's the trade. And then obviously, the higher time frame you'd be holding here.
In real time, if you're seeing, like, let's say you entered where you mentioned it on the SysD.
Yep.
And then you see that level being held, like no candle body.
Yeah,
closures.
you could add. Yeah, you could add.
Would you re-enter?
I would probably not add until I got another SysD higher. But I'd probably enter on like this chain instead of delivery as well. I'd add more contracts.
Okay.
Because accumulation can't go to a reversal, right? Price will never do this. Never. Never. It'll only do this. That or that, right? Cannot go from an accumulation to a reversal. This is not permissible. That will never happen. So yeah.
I've never like studied AMD. Should I go over that lecture?
That's market cycles. That's something we'll add on to this, right?
Okay.
I have a lecture on that called IPTA Market Cycles. So you can find
Is it too early to get into?
No, that'll be coming up as well soon. All these things are going to be coming up. Right, so that would be that trade, right? And then again, the next day, what are you looking for? Same alignment into that high, and this next day we should get it, right? So what are you trading for on the Friday? That high, right? Same direction. In this case, daily candle closure, you might want to look for shorts potentially, but I would still trade towards that high based on how close we are to the draw. So I would mark out the previous day high. You see how ES just absolutely rips it? That liquidity?
Yeah.
That would be your indication that NASDAQ is not going to, right? So there.
So that SMT is like a reversal.
Yeah. Well, you would like. Let's look how the session plays out. You can see it. So the next day, you can see that we open up right in New York, and again, we'd be trading towards this high, right? Trading towards this high. That's the range of the previous day high, previous day low, right? So what you're going to notice immediately on open is that price once again comes down. Do you have any SMT? Yeah, we have a big SMT right here, right? Do you see this huge SMT that forms?
Yeah.
Perfect. So again, you look to trade in the direction with that SMT. And for me, based on seeing this structure, I would trade the ES because the ES looks much stronger. Notice how coming into that New York session, we have this bullish divergence with the ES, and then ES actually closes aggressively through at 6 a.m., right? These candles on the lower time frame. See how NASDAQ's kind of weaker in here? And then forms that secondary stop hunt. Anyways, the minute this stop hunt forms, it's going to be at 9 a.m. So you're going to have, essentially, you're going to have that SMT forming, and you're also going to have this SMT forming, which is a really, really obvious stop hunt. All right, do you see that?
Even, yeah.
So this is like very, very obvious that ES is stronger because ES is like not even coming anywhere close to that liquidity, whereas NASDAQ's fully running it, almost taking previous day low. But regardless, whatever index you want to trade, say you wanted to trade NASDAQ, you're still going to get the signature on both, right? So for me...
But I think we didn't get a fair value gap on ES. We only got it on NASDAQ.
Yeah, this is going to be a stop hunt. So this one you wouldn't have a position in, right? So you can see we actually do have a fair value gap on the ES here, right? Small one.
Oh, it's tiny.
Yeah, still a fair value gap, right? But for me, the more obvious signature is this stop hunt, this external range low raid, right? We're also still in the context. Remember I said about a fair value gap. This displacement range is still valid in here, okay? You see this fair value gap in here?
Yeah.
You see this 4-hour fair value gap in here? It's still inside that 4-hour fair value gap, okay? So you do have higher time frame imbalances, but if you want to just use the rule of a recent imbalance, then you're still going to see a small 1-hour imbalance on the ES, right? Again, another sign that you want to trade ES this day is the fact that the ES actually prices in a what? Displacement of the market, right? Nasdaq doesn't have a displacement of the market in these candles, does it? There's no gap, right? So ES is stronger, obviously, right? That's order flow. But no matter which one you trade,
we do have that gap right there on Nasdaq.
But it doesn't reprice it. No, and also that's not the same candles. Do you see between 6 a.m. and 8 a.m.?
Oh, yeah.
There's no inefficiency in Nasdaq, right? Let's make this really dark so you can see it. All right, that's the inefficiency right here on the ES, okay? See it?
Yeah, I see it.
Perfect. So I'd obviously be looking to trade ES, but it doesn't really matter which one you want to trade. You're going to get the signature on both. So you're waiting for the consecutive series of opposing candles. Say you're just trading Nasdaq. Right? I would be trading, as soon as this stop hunt forms right here, I would be trading this SysD on E. Again, you can even notice how quickly ES closes above this high, right? Compared to Nasdaq. So this is the chain of state delivery on Nasdaq. So you would take this long. And you'd be targeting, 2R. I'd just be targeting the Asian highs because the Asian highs are really obvious. It's a very obvious consolidation. But the better trade would be on ES, taking it from this SysD to that better, higher confluence drawn liquidity, right? And then, of course, you can actually keep running ES higher and trailing with Nasdaq, right? You see how ES gives you way more market displacement? And it takes out the previous
but at the time, like those highs would be the target, right?
Yep. You take most of it off here. Like you trade Nasdaq or ES here, but trading ES is obviously better because order flow is much more bullish. You can see that. Look how much faster it closes above this high. See that?
Yeah.
The candle that closes above this high on the ES is this candle right here on Nasdaq. See how Nasdaq is the one forming the divergence at Nasdaq's forming a down close diverging candle as ES is changing deliveries on the 15-minute chart. See that?
Yeah.
That's clear strength and weakness, right? It's forming the divergence on Nasdaq. So there you go. That's essentially that whole week using that model. Pretty simple model. And you can see all you need to do is be able to identify. Okay, let's do the next day, for example. What's the draw on liquidity for the next day? Still that high, right? Maybe. ES took that high. And this closes, right, kind of as an inside bar. So maybe we're expecting Nasdaq to come and take this low and then move higher, or just go lower, right? Again, for me, the obvious draw is going to be that high. We're so close to that high, and this candle closes with a wick back into the range, right? Off of what? This daily order block, right?
Yeah.
And it's also going to be a weekly order block now. Right? Oh, actually, this is a doji. This is essentially a weekly volume balance in there as well, right? For the next week. So, it's for me the draw is going to be obviously higher. Can we position ourselves on the Monday for that draw? Same exact thing. Well, in this case, you can see it already happens by the time New York opens, right? So what happens? New York opens here, and again, you would just assume that price is going to keep going higher because we're at all-time highs now, right? Or we're near all-time highs. We're at all-time highs in the ES. So we're like ES at all-time highs right here, okay? So you're going to assume that price is going to keep going higher, correct? So how would you trade this? Same thing. Well, are you bullish or bearish? You're bullish, right?
You're bullish, so you look for inefficiency.
Yep.
And then a divergence in that.
Yep. There's your inefficiencies. Mark them both out. I mean, this one's way better of an inefficiency to use because it has a devil's mark open. Right? It has no wick here, so you'd want to see price and you can clearly see the divergence, right?
Wait, what about the devil's mark?
There's no
Like,
wick here, so it's very likely that it will want to reprice that wick, and this is a tiny gap, right? So it's probably going to go lower into that wick. Makes sense? Because with the 4-hour candle, it's repricing the wick.
So whenever you see a devil's mark on the open, you expect it to reprice
yeah, especially if there's two fair value gaps in very close proximity like that. See that?
Alright.
If it comes into here, it may as well just wick another 30, 40 points into here, right? Anyways, massive divergence. Like, you don't even need to point it out. It's just massive. In here, right? You can see this comes all the way below this candle, so you know there's divided divergence in there. Again, you'd probably be wanting to trade the ES and not the NASDAQ, just based on the strength. But say you want to trade NASDAQ, fine. There's your divergence right in here. Right? No chain of state delivery when it comes in, though. Where would chain of state delivery be? Up here, right? The first time.
Oh, that's...
Then we form a swing high. From a lower low, we have another SMT divergence. So now we have another chain of state delivery level, which is way better for our structure, isn't it?
Yeah, for sure.
Once we get that closure, long it, stop loss is the rejection block low, target is 2R.
Okay.
Well, in this case, the target's that high. All right. There you go.
By the way, quick question. If I'm trying to do this on like crypto, let's say just to practice.
Yeah.
The correlated asset would be like Bitcoin with any altcoin, or
I would do like Ethereum probably.
Because they're more close. Yeah, I was trying to find like what's the closest thing to.
Yeah, let's look at an example with Bitcoin. Sure.
With, for example, but.
Okay, let's do let's pick just a random day. Let me just randomly select bar, go back. Okay. Let's do this day. Oh, it's a new week, actually. Perfect. Okay, let me see. So I can see that we're coming. Let me look at Ethereum here.
By the way, next week you're not trading at all?
I'm only going to be flipping from my Apex days to count. That's it.
Oh, okay.
Okay, so I can see that we have this really nice drawn liquidity for Ethereum here. Down here, potentially. Yeah, we have a double bottom. And then we have this. So I'm expecting price to maybe form a divergence at these lows before we go higher. That'd be bearish for Ethereum to come into that low and then see what happens. So let's just play. I wouldn't trade on this until, like, I wouldn't trade anything in here until Ethereum took this low, essentially. Or we got a significant, daily shift. Okay, this is a significant daily shift for me. So now I think we're going to leave this low potentially as a failure swing. And now I'm targeting the other side of the range on Bitcoin. Like here, right? 65K. Daily bias now is going to be longs up into that high. So let's see if I can position myself in this week, right? On these days, right? You notice how I just don't trade these opening days because I'm not convinced that Ethereum won't take this low yet. So if I was trading Bitcoin, like I wouldn't care about this gap until I saw Ethereum not take that low, right? And then start to push up. Now, once I get this daily chain of state delivery, all is good, right? Now I can start looking for longs on these days, okay? And all the way, essentially, until we hit that high. Now I just look for longs, okay? So let's see how I would do it. Let's say I chose the first day I could trade, which is this day.
Hold on. The SIST didn't happen earlier than that?
It happened right here. On the daily chart.
Yeah, I'm saying not on, like, look at the down close candle, that wick. Like right before.
This one?
No, like before it, like 4 candles before.
Here? Yeah.
No,
oh, wait. 1, 2, 3, 4, right here.
5, 6. Sorry, go 5, 6. Yeah, so this wouldn't count?
As what?
Like since we're closing above it as a SIST.
No, this has no SMT, the lows.
Oh.
This is not an order block, right? An order block needs to have a liquidity sweep and SMT, right? So we put
had the liquidity sweep, but it's just missing the SMT.
There's no SMT. Like, do you see how Ethereum puts in equal lows here? It's very obviously going to run that low, right? As it does. Now we have a SMT forming in the market. Do you see that?
Yeah,
here.
Okay.
That's what I care more about. That's why I don't care about trading these 3 days, or even this day. I care about that shift, right?
Yeah.
Now, once I have that shift, I know I can just go long every single day until that draw is met. Right now I know that we're going to not... Now once I have this shift, I know we're not going to go back down below this low. Okay? So now I have more clarity in direction I want to trade. So now I just wait for a 1 hour 4 hour 4 gap in the New York session to trade every day. So let's do this day. So I know what my direction I want to see. I want to see longs in this New York session. So we can see we get a push up here. And then the 4 hour, that's interesting. Yeah, there's a 4 hour gap in here, but that's the end of the day. Let's see if there's anything throughout the day I can trade. Perfect. I see this inefficiency right here on Ethereum in the London session. Notice how Bitcoin doesn't have a displacement range in here? You see that? There's no fair value gap where the Ethereum has a fair value gap, right? You see that?
Yeah.
Okay. So what am I going to probably be trading? Ethereum.
There's a tiny one right there.
Where?
On Bitcoin. So right after London.
Here.
Yeah.
Oh, I do see that. Sure, yeah. It's a good one. Okay, perfect. You can actually trade that gap too. But that's before the session opens at 7 a.m. I'm going to wait till the session opens at 8 a.m. So during 8 a.m., what do I see? There's the fair value gap, right? And then you get a massive divergence. Do you see that massive divergence we have?
Mm-hmm.
That's pretty obvious, so I'm going to mark out those lows. Which is even better because that's in a fair value gap, isn't it? Right?
Yeah.
So that'd be your realignment. So essentially, as soon as we come in, I don't know why it's not showing me, but when we come into these lows on Ethereum, you can see that's the stop line, so that's the level. So then this is my chain of stay delivery right here. I'm going to wait till the session opens. When does the stop line actually happen? Why is it not showing me my candles?
Does the sessions matter with crypto?
I would just always trade with sessions. So I see the stop line happen right here, okay? So there is here is the SMT right there. Perfect. That's in the kill zone. Now I can look for this consecutive series of candles right there. There's my chain of state delivery. Take the entry as it comes close. Stop loss is the rejection block low, and I'm going to target. I don't know, where's the draw? Let me go to the hourly time frame. Oh my god, look, I mean, that's the draw. That's the higher time frame draw, but I guess you just want to lock in like the next swing high. Where's the next swing high? Oh, it's these equal highs. There you go. There you go. So that's your trade, okay?
Yeah.
Right, you just want to lock in that hourly swing point in case it wants to retrace, which it does. Okay, and that'd be one day, and then the next day, I would do the same shit. I would keep doing the same shit until we reached that high. As you can see, it gets very, very choppy near this high, which is why I don't like trading Bitcoin, right? Like, this is not ideal market delivery, is it?
Mm-hmm.
That's why I don't trade crypto. Crypto looks like this. Why the hell would you ever day trade this? What you can do is trade something like gold, which is a lot cleaner in my opinion, right? So all these concepts work. So like if you're trading like a higher time, if you're swinging something, like you're swinging gold. Here's a really good example. This is daily inefficiency right here. Obviously, we're in a bullish market, correct?
Yeah.
We're at all-time highs, create all-time highs. Don't fade the order flow. Correlated asset might be something like silver.
Can you trade this on Apex?
Yep, you can. You indeed can. Okay, mark out my daily FVG. Mark out my daily FVG, same one. Okay, daily, so I want to go hourly realignment. Looking for some sort of SMT in here. Perfect. See the SMT right here? Equal lows?
Yeah.
That's so nice. That's a really, really nice SMT. Whenever we price in equal lows like this, you see how we have like these relative equal lows? This might be an actual, I think that's actual equal lows. Mm-hmm. And we have that stop line. That's a super obvious reversal coming in. Because equal lows are going to be protected. The minute I get this SysD, right? I'm daily trading, so I just wait for that SysD. Now I'm not gonna long this candle, okay? On the daily chart. Why? Because you see how we have all these imbalances in here in this leg that creates the SysD?
Yeah.
I'm just gonna wait for price to come back into like one of the imbalances. So for me, I'm just gonna wait. I'm just gonna put a market order like right at the small imbalance right in there. Do you see that? The tiny FVG in there?
Yeah, I see.
Just because it displaced way too much for me to market long that. Then stop loss is gonna be the rejection block low, and TP is gonna be 2R. That's how you would like swing trade using these concepts. Really easy. You could also just, because of seeing how big that manipulation leg was, and because of how bullish the market is, I would also just like hold. If I'm swing trading this using the same exact concept, I'd be holding some runners to like here. Just because that's a huge manipulation leg. And it's a double bottom placed on silver. So I'd be thinking there's going to be a lot of expansion coming into this market. Let's see. So I would be holding to there. Let's see if it actually delivers. There you go, right? That'd be a swing trade I would take. To there, and then I'd be holding some runners all the way up to here. Because they're swing trading, so it doesn't really matter. And you get stopped out of your runners.
Okay, perfect.
Right. So it's the exact same concept we just talked about, but using a daily time frame, right? And an hourly chart using the exact same foundation.
Yeah. So like with the daily key level, we would use the 1 hour SysD.
Yep. Or if you want to choose a weekly key level, say for example, let's choose a random week. Let's choose a bearish week. Okay.
We would go with the 4 hour.
Yeah. Let's look at these. Let's look at this failure swing up here. Let's see if silver takes it out. Oh, nice.
Wait, quick thing. Why do you mention inverse fair value gap in the mini lesson?
Because that's a nice signature to look for. So if you ever have a strong reversal, like look here, okay? So on this NASDAQ chart, let's look at the weekly reversal we saw on Friday, okay? We have this SMT divergence. Where is that same low? It's just huge divergence forming in the market. DS is so much weaker than NASDAQ right now. Okay. So that's a weekly divergence, correct?
Mm-hmm.
Like a multiple week. Like we took out this week's low, which is a swing point, which is essentially this week's low right here on NASDAQ. Okay. So huge weekly SMT inside of a what?
Inside of
weekly fair value gap.
Yeah.
Right. There you go.
Yeah.
What's the lower time frame to the weekly?
4 hour.
Perfect. So this 4 hour change day delivery happens right in here, right? See that? Consecutive series of opposing actually, it could be right here. You could use that one. Now for me, I'm going to use the leg with the inversion fair value gap because it's a higher confluence price leg, right? So I'm talking about. See how the best reversals have these inversion fair value gaps created in them?
Wait, what's the difference between a regular and an inversion?
We close through this bearish fair value gap. Inverting it. See that? So that's an example of the weekly 4 hour. Now let's see how it actually prints on like a different time frame. So here, let's look at maybe this reversal down here. Okay. So do you see how we have this SMT divergence that forms last week or a couple weeks ago? Below these lows. Actually, we don't even form. I remember putting a double bottom on here. That's not a good example. Let's find another. Let's go to a 1 hour daily chart. Actually, let's choose an example of a trade we'd take. That's better. Okay. Let's do a trade we would have taken, for example. All right, so we have this 1 hour for value gap right here, right? What's the lower time frame to the 1 hour?
5 minutes.
Okay, perfect. Let's mark out the 1 hour. Perfect. Now we have 5 minute. We're looking for the SMT divergence in that level, right? Very, very nice SMT divergence at these highs, right?
Yeah.
Okay, same level, clear divergence. What's the consecutive series of opposing candles into that key level? I would use, you know, I see how that's 5 minutes super choppy in here?
Yeah.
I want to see a clear set of one directional candles into that high. So for me on ES, it looks better on the 5 minute, but maybe if I pop up a time frame, I'll just see a few candles and not like 10. Here we go. Okay. Do you see all these candles? 1, 2, 3, 4, all of them into that level?
Mm-hmm.
Perfect. That's my chain to state of delivery right there. Let's see if there's another estimated form. We also have another one right here, actually. So again, inside of that key level, right before FOMC, we have another stop hunt. We take out this swing point. Yeah. Okay, so maybe now I can actually get some better lower time frame realignment. Okay, so inside of that lower time and that higher time frame chain to state, we also get this lower time frame stop hunt as well. Do you see that?
Yeah.
Okay, so now I have a higher time frame stop hunt with SMT, this lower time frame stop hunt with SMT, and the consecutive series of candles here looks really obvious, right? It's just this candle, right?
Mm-hmm.
See how ES respects that level really well? Same with
Yeah,
NASDAQ. Oh, shit. So you can see how ES is respecting that level very nicely. As I don't know why this thing is taking so long to load. Okay, and then
Were you short on this day?
Yeah, no, I didn't actually short FOMC. Unfortunately, I didn't get to my computer to see the realignment. All right, so that would be the stop hunt on NASDAQ, right?
Yeah.
And that would be that chain of state delivery. So as price closes through this candle, what you want to do is short this one. Right, and you can put a stop loss above this high, or you can put it above this high, even if you want to be very safe. But this is technically a valid. I would probably place my stop loss just above this New York high that diverged, just to be safer, right? I know I'm expecting a big move, and then you can see the inversion fair value gap that forms in that leg is going to be very critical in assessing that chain of state delivery. So do you see how we have this inversion fair value gap on ES?
Yeah.
That's very telling, isn't it? That's why your stop loss. That's why I would have shorted ES. See how NASDAQ doesn't form a fair value gap into that level?
Mm-hmm.
But ES does,
Wait,
right?
an inversion fair value gap is a regular fair value gap that gets closed through
After a stop hunt in a higher time frame key level, right? It's all narrative based. It can't be a pattern, right?
Yeah.
So this in here, you wouldn't consider this inversion fair value gap in here to be bullish, for example, right? I would not long this inversion fair value gap. There's no narrative for it, right?
Yeah.
But there is a really strong narrative for this one, isn't there? Stop hunt, SMT, bearish order flow. Do you see when price closes out? Look exactly where price comes back into. I'm going to mark out the halfway point of this fair value gap, okay? Price comes all the way back in, retests that 50% mark, pretty much, right?
Mm-hmm.
Very bearish. It's also going to be retesting this balanced price. I mean, this is one of the most bearish signatures of price, is when you get like a... Look at this. So this comes exactly into the halfway point of this fair value gap, right? But it's also retesting this, it's called a balanced price range, okay? That's why the inversion fair value gap in this price leg makes a lot of sense for that chain to state delivery, okay? Now you want to be looking for these whenever you're trading these reversals. So let's say we're trading, let's just pick like a random fair value gap in the direction of a draw. Let's get rid of everything. Let's keep these levels. But let's say we're going long. Where's like a nice fair value gap? Here we go. Say we're going short off this fair value gap in here, okay? To the 5-minute chart. So what are we looking for in here? SMT, right?
Yeah.
Perfect. You can see we have this swing high on the NASDAQ. Where is it? Right in here. It's called a precision swing point. Now, you haven't learned about that. But essentially, we don't expect this swing high to be taken, actually. Because you see how this is an up close candle and this is a down close candle?
Yeah.
So this is a form of divergence that we expect to see hold if price comes and retests it. It's called a precision swing point. You don't know about that yet, but I would look at this, for example, as a valid divergence. Because price is trading into this precision swing point area, right? And it's respecting it. So this is a form of you don't want to see it. This is the exact proof by disproof. This is an area where you don't want to see a divergence, okay? So if you saw a divergence like this, I wouldn't short it, for example. This precision swing point is like the opposite of what you expect to see with SMT. Because this placed an up close candle and this placed a down close, you don't want to see that candle traded through, okay? Does that make sense conceptually?
It does, but like how often do these appear?
Well, when they appear, you look for it like instead of looking for this SMT, you just look for this, okay? But you wouldn't trade this because you don't know what I'm talking about. But I'm just saying this is what I would look for, okay? In this specific example, if I didn't see the SMT, that'd be the equivalent of me seeing the SMT, okay? If that makes any sense. Me not seeing the SMT is like me seeing the SMT.
Well, what's the issue with the SMT happening here?
Because you don't want to see this precision swing point repriced. There's a reason why they price an up close candle here and a down close candle here, okay? They're going to hold that level. It's an algorithmic level, essentially, okay? That's all.
Got it.
So when price comes into this PSP, I'm now going to be looking to short. And again, what I want to see is the consecutive series of opposing candles into that key level. Well, for me, in here, you can see we have this run, right? On the 5-minute chart. This run right here. In that, do you see these inversion fair value gaps that are being created? As price closes through, we have this inversion. We have this inversion. We have this inversion, right? This is a bearish sign of order flow. If you look at a higher time frame, like a 50-minute chart, you're going to see that V-shaped recovery. So you can see that we come into that PSP, and what do you notice about this one major inefficiency of the market, right? That's created in that leg. See how ES closes through these fair value gaps?
Yeah.
And NASDAQ, almost closes through. But when it changes delivery state, it does close through. That's where you can short this next candle with a high degree of confluence. This open of this next candle, that this is a protected high. And then you can target all the way down to the lows. In this case, it's right there. Or you want to hold, for 2 hours, see if that delivers. Right? You see that? That kind of confluence in there. So when you're looking for these inversion fair value gaps, you'll be able to see them at every reversal point. It qualifies the highest probability reversals. So if I pick any random 1-hour continuation model. Oh, it's not syncing. Okay. Let's look at this fair value gap right in here. I'm just going to mark out the SMT that forms on this time frame as well. Okay. All right, you see that 1 hour fair value gap in the SMT? Do you see all of these inversion fair value gaps that are getting repriced in that change in state delivery leg? Look. Do you see all of these gaps in here? So if we use the replay function, you'll be able to see a higher time frame gap that we're just completely inversing. Do you see this inverse 15-minute gap?
Yeah.
Look how price will respect that 15-minute gap now. The inverse of that, right? So that inversion fair value gap gives you a very good indication of order flow. So again, with this kind of state of delivery, you wouldn't, it's also a 4-hour gap, I believe. Yeah, it's a 4-hour gap, right? So 4-hour M15, right? You're not going to just long this chain of state delivery up here. Because here we displace too far away and we have these major fair value gaps and inverse to retest. So you put a market order right here, and then you can even just cover, right, again. Cover the rejection block low. In this case, you're going to get stopped out by that wick. That's why it's always risky, in my opinion, to cover the rejection block low as opposed to the actual low. Because you see how here you just get stopped out by that small wick? Safer approach is always going to be covering the SMT low. But that inversion fair value gap is something you can use for an invalidation as well. Like if price closes back through that inversion fair value gap, you'd probably want to be out of that trade. So it gives you an extra confluence, is all I'm trying to say. Okay? Every high probability reversal will have that inversion fair value gap.
Okay, gotcha.
Okay, so that is going to be like the simple model.